everybody, welcome back. Jeannette Womble here, your local realtor in Columbia, South Carolina. So you're thinking about buying a home, but you don't really know where to start. Well, by the end of this video, I can promise you, you'll know everything that you need to know to be ready for one of the most exciting things that you can do in your lifetime. So stay tuned as I take you through the things that you need to know before you get started. The biggest mistake you can make is to jump on these big websites and start looking at houses and looking at that section that says your payments will be. And the reason why is because most of the calculators that they use on these websites are actually not fully accurate. There are assumptions about down payments as well as incorrect estimates for taxes and property insurance. So what I'm going to do with you today is I'm going to explain to you how to break it down so that way when you do go online or you have a realtor help you, you're really focusing on the right price point for your goals and for your budget. The first and most important thing to do is to speak with a local mortgage lender. These lenders are going to be able to ask you questions about your plans, whether you plan to be in the home for 1 year, 5 years, 10 years, or the rest of your life. That can affect your payment due to the different types of mortgages that are out there. It also can help you to understand what your credit score might be and if you have any debt that you might need to pay off or pay down to be better qualified to purchase a home. So if you have a certain budget in mind, step number one is to speak with a local lender and make sure that if your budget is $1,500 a month, that the price range that you're shopping in is going to match the budget that you want to keep it to. It also will allow you to determine if you're qualified to get a mortgage. There are times that you might call and you might get declined. So it would be very frustrating to be out looking at houses only to find out that you've got to wait another 6 months for a job to season or for a debt situation to be corrected before you can actually make that offer. So how do you break it down? Well, the first thing to understand is what interest rate are you going to qualify for? Once you know your interest rate, then you can factor in your down payment amount. The majority of the loans that we work with right now require at least 3.5% down. So if we're using, say, the median price in Columbia of $250,000, you're looking at needing to have at least $9,000 or so for down payment money. The second thing to consider is your closing costs. Most homes in that price range are going to have about $6,000 on average for closing costs. So generally speaking, if you're shopping at a median price point, you need to have about $15,000 saved up for your down payment. Now, depending on the type of market that you're shopping in, if it's more of a buyer's market or a house that's been sitting out for a little while, there's a good chance that your closing costs can be negotiated into your contract. So instead of having to have that $15,000 or so to put down, you can go back to about the $9,000 mark and utilize that money for your down payment. There are a few exceptions to this down payment rule, and they would be if you are a VA qualified buyer. So if you've served in the military, thank you for your service. You can qualify for 100% financing. And if you can have your closing costs negotiated in, I've had situations where we've gotten the earnest money, which I'll explain in a minute, back at closing. So you essentially can buy with no money down. Another option would be to look at rural housing or programs that are government backed that provide 100% financing. And when you speak with a local lender, they can share with you those types of programs and help match you to the best fit. So what do you do once you find the house? Well, once you find the home, the next step will be to make your offer. South Carolina is an attorney state, so your purchase will need to be managed by a local qualified attorney. When you make your offer, you'll have the opportunity to negotiate and determine the amount of earnest money. Earnest money is essentially a down payment on a home. However, it is a contractual amount. And if you decide to break the contract, there's terminology in the contract that will award that money to the seller should you go into default. In our market, most earnest money runs just under 1% of your purchase price. So you do want to be prepared if you are shopping, say, for that $250,000 home, to have about $2,000 earnest money. Now that money does rest on several contingencies in the contract. A contingency is an opportunity for you to essentially change your mind if it's not satisfied. So the next thing I'll do is walk you through the standard contingencies that we see in our South Carolina contracts. The Columbia, South Carolina contract has three main contingencies built in. They are condition. You have 10 business days to conduct your due diligence and all of your inspections, which are at your expense. The second is appraisal. If for some reason the property does not appraise, this is done by the bank, and the seller is not willing to come down or negotiate the appraised value out, you do have the opportunity to walk away and to terminate your contract. The third is your loan qualification. It is very important to get your tax returns and your employment, your W-2s, 1099s, bank statements into your lender within 5 business days. Our contract provides 5 business days for you to get your documentation to your lender, because the financing contingency expires 5 business days before closing. So just to recap, when you have your home in contract, you're going to rest on 3 primary contingencies: your loan qualification, condition being satisfactory, and the property appraising. Digging deeper into condition, again, as I mentioned, you have 10 business days to conduct your inspections at your expense. Lots of people are going to inspect in our area for at least 3 things. The first is termites and moisture. So we have an inspection called a CL100. Most pest control companies will provide you one of these when they inspect. You can anticipate paying anywhere from $95 to about $150 for a termite inspection. The second is heating and air. We do live in part of the country where people run their air conditioners a whole lot more than they run their heat. We have a lot of issues with air conditioners here, and the average life expectancy is about 12 to 15 years if you're lucky. So you do want to be prepared to do a heating and air inspection. The third is an overall home inspection. We have licensed home inspectors in our area, and they are qualified to look at your major systems, also to look at cosmetics and the overall integrity of your home. So I always tell people, be prepared to spend at the bare minimum about $700 on your inspections. Now, if your house is on well or septic, you certainly would want to consider inspecting those. If it has an older roof, you may want to have a roof inspection done as well. So at the bare minimum, plan for $700, but it could go up to $1,500 for your cost of inspections. These are buyer costs, and should you decide not to purchase the house, you will not be reimbursed for these inspections by the seller. This is considered a cost of shopping and buying a home. So you do want to be prepared to have the extra money in your savings account, or a good friend who's a home inspector, and maybe they'll cut you a deal. So continuing on about inspections, if you do not have an as-is contract and you do a traditional or standard process of inspection and repair, there is going to be a second round of negotiation. And that is, once you get all those reports back, you go through them all and you look at the things that the house may need to have repaired. You can submit a repair request, and in our market, generally, if it's a mechanical issue, most sellers are willing to try to correct it within means. So if there's a problem with electrical, plumbing, heating and air, and it's a major problem, folks here tend to be very good about wanting to cure those things for the buyer. And it benefits them to do that, because if that's not done, and let's say you walk away, you decide not to buy the house, then the seller has to update their property disclosure, which is a form that they fill out about the condition of the home, and now disclose that there are issues. So it's definitely beneficial to provide copies of inspections and ask for reasonable things to be repaired. If you do that, chances are you'll be able to move into a home without a lot of issues that pop up right away. Depending on how well you know the area, if you're from here or not, it's important to research other things as well. Some people are curious about crime rates, school ratings, and even if there are registered sex offenders that live in the area that you might be considering buying in. So if you're curious about these kinds of things, watch my video called Real Estate Taboo, because your realtor is actually not allowed to delve into those subjects very deeply. And you may feel frustrated by that, but there are some great resources for you to be able to get those questions answered. I also have a group here in Columbia called Living in Columbia SC, which is a wonderful resource. We have over 20,000 members. Most of them live here in the Midlands. So feel free to jump on that group and ask a question. What are the schools like? I'm thinking of moving into this subdivision. Does anybody live there or in that area? And what do you think of living there? And that's a great way to find out from folks that are already here some local insight that may influence your decision. So just to recap for you, when you're looking at buying a home, the first thing you should do is speak with a mortgage lender so you understand what price range you should be shopping in and what your down payment would look like before you start going to open houses and asking to see houses in person. The second thing is to make sure once you have that information that you've taken the time to save up the money, not only for your down payment, but also for the cost of your inspections. The third thing is, don't be afraid about the condition, because you'll have the opportunity to go to the owner and to ask for major things to be corrected. And in most cases, they're going to be very receptive of that. The fourth thing is, make sure that you follow your time frames. So be prepared to have all of your paperwork together to qualify for your mortgage, have a list of folks that you can rely on for inspections, and have a trusted attorney that you can use to handle your purchase for you. And if you need recommendations on those things, a local agent is always a great resource. So if you have other questions or there's anything else that I can answer for you as you're contemplating this awesome step in life, probably one of the biggest investments that most people make in their lifetime, my name is Jeannette Womble. Feel free to like and subscribe to my videos and my YouTube channel, as I constantly try to provide information that is relevant to real estate in the Midlands of South Carolina. Thanks so much for watching, and I hope you're having a great day.